Hello everyone, welcome to our deep dive into the income statement. Today we are going to break down basics and then focus on the multi-step format, which is the favorite of the exam writers. This session is all about mastering the foundation so we can tackle down the questions easily. We're going to go over the multi-step income statements, which you should definitely expect some question. We're going to go over the differences between operating and non-operating items. We will go over gross profit, operating income, and net income. And in the end, I'm going to give you some CPA exam traps that you may encounter in the exam. Okay, what is an income statement? You may also hear the names of profit and loss statement, statement of operations. So think of it as video showing how well a company did over a quarter or a year. So unlike the balance sheet, which is a snapshot, income statement measures revenues, expenses, gains, and losses to tell us if the company made money or how efficiently it operated. And ultimately, it gives us something called earnings per share. Okay, now let's talk about how income statements are presented, specifically the single step versus the multi-step format. The single step format is easy. We group all the revenues and gains together and all the expenses and losses together. We have just one subtraction, then we got the net income. This is simpler but less informative. For the CPA exam, we need to master the multi-step format because this separates operating activities from non-operating ones. And it also gives us some key subtotals like the gross profit and operating income. And it is more detailed, so they are able to ask more questions. That's why they heavily favor the multi-step format. So we'll begin our multi-step journey by looking to calculate net sales and the gross profit. Okay, so let's start the first part of the multi-step income statement to reach gross profit. First, we start with gross sales, subtract returns or allowances, and then the sales discount. After that, we reach net sales. Net sales is what the company earned from its primary selling activities. So from the net sales, we cost of goods sold, which is the direct cost of the products or services sold. The result is gross profit, a critical subtotal that tells us how profitable a company core product sales before considering any other expenses. Gross profit is an indicator of the company's pricing strategy and the product efficiency. Okay, so we calculated the gross income. Now we move to the next section of the multi-step income statement, which is the operating expenses. Operating expenses are the cost a company incurs to run its day-to-day business. One thing that people always confuse, they do not include things like the interest, taxes, or unusual items. Think about a simple company to run its day-to-day expenses. We group them into selling expenses and general and administrative expenses. G&A you may see in the statements. What are they? They could be like the salaries and commissions, advertising and marketing, shipping and delivery. In the exam, sometimes they call it the freight out. They use that term. And the general and administrative expenses, what are they? They are salaries and rent, utilities and insurance, and the depreciation expense. So from gross profit, we subtract the selling expenses, then we also subtract the general and administrative expenses, and from there we reach something called income from operations. This is a key profitability metric before considering non-operating items. Now we can move to part 3. We are going to account for non-operating items, which include other revenues and gains and other expenses and losses. Once we factor those in, we reach income before income tax. From here, we calculate our income tax expense. In the end, we reach the net income. This completes the full picture of a company's profitability for the period. This is something the exam likes to question a lot, the differences between an operating and non-operating items. Operating items are directly tied to a company's main business activities, so they could be like a sales, cost of goods sold, things like that. For non-operating items, however, are peripheral activities like interest income or gains on an asset sale. A common exam trap is interest expense. We usually assume it as an operating expense, and that's a common exam trap. Interest expense is always non-operating for general companies, even if they have a significant debt. So the only exception here is, of course, banks. For them, it's a part of the operating expense. Now we're going to do examples. Other revenues and gains include things like interest revenue from investments or dividend income from stocks you own. A gain on the sale of assets happen when you sell property, plant, or equipment for more than its book value. On the flip side, the other expenses and losses could be an interest expense, loss on the sale of an asset, or unusual losses, things like foreign currency transactions or losses from strikes. Those items are important, but because they are unusual in the multi-step income statement, now let's put it all together to calculate income before tax. With an example, a company has $200,000 in operating income, but this company also incurred some interest expense of $20,000 and they had a $5,000 dividend income. So based on this, our income before tax would be $185,000. This is crucial because we are going to calculate income tax expense based on this. Since we calculated income tax before tax, now we need to account for income tax expense. And this is a very straightforward calculation. We simply multiply our income before tax by applicable tax rates. Here the example, let's say if our income before tax was $100,000 and our tax rate was 25%, our income tax expense would be $25,000. Our net income is income before tax minus income tax. Income before tax includes both operating and non-operating items like interest and gains. They're already included here. Okay, so after all those calculations, in the end, we reach something called net income. Net income is the final result of revenues, expenses, gains, and losses for the period. What does net income represent? It represents something called increase in equity. And I'm going to explain what I mean by that. But you can think of like all the financial statements are interrelated. After we calculate our net income, it flows to balance sheet as a retained earning. And how does it go? We basically have the initial beginning retained earnings, then we add the net income. If the company declared any dividends, we deduct the amounts, and the final amount goes as an ending retained earnings on the balance sheet. Okay, let's talk about an exam trap, the difference between gains and revenue. We went over the multi-step income statement, and at this point you are thinking, okay, now we are separating the operating incomes from the non-operating incomes. Then we calculate income before taxes, then the income tax expense and net income. When you think that, you say, okay, we calculate the income tax expense in the end, this is incorrect. In the income statement, we report both gains and revenues, which we are going to go with a little bit more detail later. But on the income statement, when you are seeing the revenues, you always need to report them as on the gross amount. So what I mean by that, we reported before the income tax expense, and in the end, we calculate the income tax expense. Those are like regular revenues. A company is selling a widget, that's the revenue from that widget. What about the gains? So let's say maybe the same company was making the widget, and for that thing, they had a machinery. And in the end, they sold it and they had a 100,000 gain from that machinery. Is this company in the business of selling this machinery? No, this is just like a one-off thing. So it is not a revenue, it is a gain from the sale of that asset. So whenever we are reporting the gain, we are reporting as net of tax. Like the way you can think of, if it's something you always sell, we report as gross before income tax. But if it's unusual, we report as net because we are not in the business of selling this widget. Let's do a simple example. We have a company, they have a sales revenue 500,000, $20,000 returns. They have cost of goods sold for $300,000 and selling expenses for $50,000. They are asking the gross profit. Gross profit is very easy. The formula of the gross profit is the net sales minus cost of goods sold. So here how much sale we had? 500,000 minus 20. We had $480,000 net sales. And how much was our cost of goods sold for 300,000? And in the end, it is going to be $180,000. You may ask why we did not include the selling expenses here. Because remember, the selling expenses is a part of the operating expenses. So here we are subtracting the cost of goods sold, and because selling expenses is not cost of goods, it is not included in calculation of the gross profit. Let's do another example asking us the operating income. It gave us our gross profit. Okay, so net sales minus cost of goods sold for them was $200,000. They have a selling expenses of $50,000, and they have a general and administrative expenses of $30,000 and interest expense of $10,000. Remember, it is asking us to operating income, and operating income is focusing on the core business activities. So what does it mean? We are going to subtract all operating expenses from the gross profit. But here one thing we need to pay attention is the interest expense. It is a very common expense for the businesses, but interest expense is not an operating item. So it is not including in the operating income calculation. Our answer is going to be $120,000. So which one of the following is classified as a non-operating item on a multi-step income statement? Something not part of a core business. Advertising expense, freight out shipping expense, depreciation. Interest expense is non-operating. Remember from the earlier examples. It is a cost of financing, not operating. So here the answer is C. Okay, so if we have to summarize everything, what are key takeaways from today's lecture? First, we need to master the formats. We calculate the gross profit. From there, we reach the operating income. And from there, we reach the net income. If you see interest expense, do not think it's operating. It's a non-operating because it is cost of financing. Of course, there's an exception. If the question is asking as a bank, it's an operating expense. Gains or losses are not core business. We are reporting as a net amount. We include the income tax expense and we report as a net amount. And in the end, we saw examples that net income flows to retained earnings. Now let's do some questions. Congratulations, you mastered the basics of income statements. Now we start discontinuing operations and unusual items.